Hey there, this is Seth from the RE Tipster blog, and in this video I'm going to give you a run through of how to read and decipher and make sense of the things that are written inside of a title insurance commitment. Every now and then I come across deals that are really cheap, and it's kind of hard to justify the full-blown cost of closing with a title company, but it is a situation where it does justify me going out and getting title insurance. And whenever you get title insurance like this and you're trying to still facilitate the closing yourself, eventually you're going to come across this document, and this right here is the title commitment. And whenever you get a title commitment like this means that the title company has gone through and done the actual title search portion of the process. So they've looked at all the historical deeds, documents of record, and they've developed a thorough understanding of what is the situation with the property, who owns it, who has owned it in the past, are there any outstanding liens of record, anything like that. And then this document right here is basically a checklist of the things that they need to see from you in order to finalize the deal and then give it to the title insurance company so they can issue your title insurance policy, which essentially ensures that you do officially have clear title to the property. And if anything comes up in the future, or if anybody ever comes back and tries to blame a title issue on you, this title insurance policy will actually protect you from financial liability if any issues ever come up in the future. And just speaking for myself, the first time I ever saw this document, I was just wildly confused. I could not figure out what it meant. The title company I was working with at the time did not really explain anything to me at all, and I just kind of felt stuck and I didn't know what to do. And so given how confused I was, and given how long it took me to figure out what this document said, I wanted to record this video and give you just a very detailed overview of what a typical title insurance commitment says. And this is a sample that I actually got from my current title company, which is right here, America's One Title Agency. And they do just an awesome job. They actually sat down and went through this with me to make sure I understood it. And they even put together this sample for me to use here. So that's why I'm going to go through this one. This is not a real property. And obviously every real estate transaction ever is going to have some differences to it. So if you're looking through a title insurance commitment and you're trying to follow along with this, there's going to be at least a few things that do not match up. But my hope is that by going through this document and just showing you an example of what one typically says, it'll kind of help you to understand and decipher what's written in your title insurance commitment should you be going through one. So to start off with, every title commitment is going to come with a first page that looks almost exactly like this. At the top, you're going to see the name of the title insurance company that's insuring it. So it could say First American Title, or Fidelity National Title, or Old Republic National Title, any one of those huge title companies. And Schedule A is fairly straightforward. It's going to start off with the address of the property, which is right up here, assuming it actually has a legal address, and then the commitment date. So this is like the snapshot in time at which all of this information here is relevant. This next section here is where it talks about both the owner's policy and the loan policy. And it's actually very important to understand the difference between these two. An owner's policy is what's going to protect the owner of the property. So say if I am out there buying a piece of vacant land and my intent is to buy a policy to protect myself for the purchase price that I'm paying for the property, that's what this is going to do for me. The loan policy is going to protect the lender for the amount of their loan, and it's actually going to do nothing for the owner if a title issue ever comes up. So if you're closing a deal where financing is not even involved, then there really should be nothing here in the loan policy. That's just not even relevant. If you are doing a deal with financing, it is possible to get title insurance only as a loan policy and not as an owner's policy. This kind of thing typically comes up when you're doing like a refinance of a property. So the owner already has their own policy and they don't need to buy themselves another one, but they are bringing a new lender into the mix, and that lender is going to want one. So that's the kind of scenario where that would come into play. But just so you understand, there's definitely a difference between these two. And if you are the actual owner of the property, you want to make sure this is what's showing for the amount that you're paying for that property. In a lot of real estate transactions, the cost of the owner's policy is actually paid for by the seller and not the buyer. And the reason it works that way is because if there are any title issues that come up, they're actually the seller's problem, because they're the ones who owned it when everything went wrong and they signed a warranty deed promising that everything was clear. So it's actually the seller protecting themselves, and that's why they typically pay for it. But it does not have to work that way. For example, when I buy a lot of my properties and I'm only paying, a few hundred or a few $1,000s for them, part of the reason these sellers are willing to sell for that low is because I told them I would pay for all the closing costs and I would cover everything. So if you're like me and you actually made the commitment to cover all the closing costs, then that would come out of your pocket even though you're the buyer. So now that we've got that covered, let's move on down here to where it says fee simple interest in the land described in this commitment is owned at the commitment date by, and in this case it says John and Jane Smith, husband and wife. So that's basically just saying that as of February 2, 2016, when this title commitment was written, John and James Smith, which is a married couple, is the most recent deed on record. So they are the current owner. This next section down here is where it lists out the legal description of the property. And the legal description is actually extremely important because title insurers insure legal descriptions. They do not insure addresses. They don't insure parcel numbers. So the legal description must match whatever is written on the deed. So anywhere in your documentation where it lists out this legal description, you're going to want to be absolutely positive that it matches what it says here. And legal descriptions are a bit of a strange thing. As you can probably surmise just by reading this, most legal descriptions will make absolutely no sense to the average person. But if you understand how to read these, and you usually kind of have to read them backwards, you probably know that they can actually get very, very, very specific about where the property is located, where the meets and bounds are, everything. So it's just very, very important that this legal description matches exactly what it says everywhere else. Sometimes legal descriptions are very simple, just like this one, where it's just a couple lines. Sometimes they're extremely complicated and they can go on for 14 pages. And I wouldn't say that's common, but when you get some of the larger, more complex, complicated types of properties, you can see that come up sometimes. And then lastly, down here, you should see this signature block with an actual signature there. This particular example is obviously not signed, but when you get your title commitment, you should see a signature here. Okay, now moving on to the next page. This page right here is known as Schedule B, Section 1. All this really is a big laundry list of stuff that you're going to have to collect, get signed, and verify in writing. And then once you have all this stuff pulled together, you're going to give it to the title company so they can go and complete the title insurance policy. And I just want to go through each one of these things so you understand what every one of these things is saying. These first three things up here are kind of like boilerplate. It's saying that for this title insurance policy to be effective, you need to actually pay the interest for the mortgage if you have one. You need to pay the title insurance premium, fees, and charges to the title company for the actual policy. And then all the documents that are listed below need to be completed correctly and executed correctly by the right people and notarized and all that stuff. So like I said before, no two real estate transactions are ever going to be identical. So this particular list is kind of like specific to this property, but these are some pretty common items that you're going to see in many, many deals. This first one right here, owner's seller's affidavit covering matters of title. This is basically a form that the title company is going to provide for you, where the current owner of the property is going to say that they do not know of any title issues or liens or any problems outstanding on the property. It's just a boilerplate form that the title company always has everybody sign. So it's a pretty simple form. Just get that from them, get it signed, notarized, and put that in the pile of stuff to return to the title company. The second item here, warranty deed from recited owner to recited purchaser. That's just saying that there needs to be an actual warranty deed completed, filled out correctly with all the correct information and signed by the seller and then notarized and then recorded. And then that recorded copy with the actual recording stamp needs to be the document that is returned to the title company. So a lot of times you're not going to be able to give this to the title company until well after the deal is closed and the money has been paid, because it's going to take at least a little bit of time to get that document recorded and then get the recorded copy and give it to the title company. So just so you understand how the logistics of that work, you don't give the warranty deed to the title company and they get it recorded, because if they're not facilitating the closing, that's on you to do that. So you got to get it recorded and then get the recorded copy back to the title company for them to finish their job. These next three sections here rarely apply to me when I'm buying vacant land, because usually when I'm buying land, I'm buying it for a very low price from somebody who does not have a mortgage on it, so they don't have to discharge anything. And I'm also not getting a mortgage when I'm buying it. I'm just paying cash, so I don't have to get a mortgage completed either. So with a lot of my vacant land deals, these three items are just not even going to be there. But if you're working on a deal that does have an outstanding mortgage from the current owner. In this case, there are actually two different mortgages on the property from two different lenders, and both of those mortgages need to be paid off, and each of these lenders need to sign a discharge of mortgage. That discharge of mortgage then needs to get recorded, and then you have to give those recorded copies to the title company, just like you did with the warranty deed. And then item number 3 here is saying that the buyer, if they are getting a mortgage, and in this case they obviously are, as is shown right here, that mortgage needs to be signed, notarized, recorded, and get that recorded copy back to the title company with items 2, 4, and 5 as well. So as you can see, whenever you've got financing involved, there's a lot more moving pieces and a lot more time involved with just getting different parties to sign different things, and then sending it all to get recorded, and then getting the recorded copies back to the title company. All that stuff takes time, and it takes a lot of attention to detail to track it and make sure it's happening correctly. And that's where a title company or a closing attorney really proves their value, because they really handle all of that work, getting all the documents signed, getting them notarized, tracking everything, handling the flow of money. It's really a lot of stuff that they do in some of these transactions. And I think whenever you've got a deal that's, worth anywhere north of $10,000, it's pretty easy to make a case for getting them involved, just because they're going to take a huge amount of work off your shoulders and make sure that it's all being done correctly. This section down here where it says, note relative to the above identified mortgage, the discharge of same may be presented at closing or in lieu thereof. All of the following actions must be performed. So what this is telling us is that we actually have an option B. If we are not able to get these discharges signed, notarized, recorded, and sent back to the title company, instead we can actually collect all of this stuff and verify that it's going to happen with a lot more documentation. It's going to be a lot cleaner to just get these two things, but it's also going to take time, and if you want to work around it, you can do these other steps here. So moving on down the list. Item 6 right here says a legal description of the property to be insured was not furnished at the time of application. Please verify that the description as shown on Schedule A covers all the intended property. If there are any discrepancies, please contact our office immediately. The reason this is in here is because a lot of times when title companies start their order for a title insurance policy, all they're given is either an address of the property or a parcel number, but they don't necessarily have the full legal description, or even if they do, they need to go out and verify that. And as I said earlier, title insurers do not insure addresses or parcel numbers. All they insure is the legal description. And so what they did in this case was they probably just got the address, and then they went out and they pulled this legal description and put it in here. And while they're reasonably confident that it's correct, they want you as the closer to verify that so that they're not on the hook if they got it wrong. So that's why this section is in here. And then item number 7 here, secure and submit a letter from an officer of the homeowners association stating that there are no liens claimed or unpaid assessments. The reason this is in here is because the title examiner, as they were reviewing all of the historical deeds and other documents on record with the county, they probably came across something either in those documents or they found something else that tipped them off that this property is part of a homeowners association. And homeowners associations, if you've ever been a part of one or if you know how they work, they're almost always going to require some kind of monthly or annual fee that the property owner has to pay in order for them to maintain certain benefits for everybody that lives in that association. And they work a lot like property taxes, but the difference is property taxes are very easy to track and make sure they're paid current, but HOA fees are not necessarily that easy. In many cases, it's not something where you can just get on a website and check the status and make sure it's good. Sometimes you have to figure out how to get a hold of them and give them a call. And in this case, they're saying, we want something in writing from that HOA proving that there is nothing past due and they don't have any liens or other claims against this property. So long story short, you could just put together a very brief Word document. It could be as little as 1 sentence long and then signed by an officer of that HOA and then printed on their letterhead. And if you get a copy of that and send it back to the title company along with all your other recorded documents, that should take care of that issue. Items 8 and 9 here are talking about 2 liens that showed up against the property in the title history. And the reason they're showing up here is because the liens showed up, but there was nothing else of record showing that those liens had been paid off and released. So the title examiner is basically concluding that those 2 liens are still out there against the property. They need to be paid off, and we need actual written proof of that. And usually what that's going to be is an actual
signed, notarized, and recorded release of lien or something to that effect. Whenever these kind of things come up, the first thing I do is I call the seller and I just say, hey, did you know that these are out there? If so, I'm going to need the original signed and notarized discharge or satisfaction or release of that lien. And until I have that, this deal is not moving forward. Sometimes if you're lucky, the seller is going to have that original documentation. They just never got it recorded, so they can just give it to you and then you can get it done. Other times they won't necessarily have it, but they can go through the steps of getting it because they did pay it off and they just never received release documentation. It's not supposed to work that way, but it can happen from time to time. In the worst case scenario, the seller is going to have no idea that these things are out there, which means they haven't paid them off, which means they're going to have to cough up this money to take care of that. So whenever there's liens on a property, this is the kind of thing that's going to show up telling you what it's for, how much it's going to cost to pay off, and that will hopefully be enough for you to work with the seller to get that taken care of. This next item down here where it says payment of taxes, this is a section of the title commitment that is basically just going to tell you what the current status is with the property taxes. It's going to not only say what the taxable value is, but it's also going to tell you how much has been paid in taxes over the past year. Here in Michigan, we actually get 2 tax bills every year. There's one in the summer and then one in the winter. Other states will just have one annual tax bill. But whatever the situation is with the property taxes, whether they're current or delinquent, and if they're delinquent, how delinquent they are, all of that stuff should be included right here in this section. If there are any delinquent property taxes, that's going to mean that those taxes need to be actually paid off, whether it's by you or by the seller. Somebody has to pay the bill, and then you have to get written verification that it's paid off. And typically you can get that in the form of like an invoice from the county or from the city or the municipality. As long as you're actually able to pay those off, it should be pretty simple to get that written verification. And then down here, it should list the property's parcel number. And then the last 3 things you see down here is sort of like more boilerplate stuff that's going to be baked into most of the title commitments that you'll see out there. This first one is saying that you must tell us in writing the name of anyone not referred to in this commitment who will get an interest in the land or who will make a loan on the land. We may then make additional requirements or exceptions. So that's basically saying if there are any other owners or people who have some kind of an interest in this property, but it's just simply not a record, so they couldn't have possibly known about it, it's your responsibility to figure that out and then let them know. And just so you know, this is kind of like a catch-all thing that you don't necessarily have to provide anything or give anything to the title company to meet this item. It's just kind of a CYA for them saying that, hey, if we don't know about it, then it's not our problem. We can't do anything about it, and it's your job to let us know. And then item E here is saying that if the property has a mobile home or a modular house on it, you need to actually let them know about that, because in Michigan there are some additional laws and regulations that may require additional paperwork to be done. Depending on what state you're working in, this may or may not show up and you may or may not have to do anything. This is kind of like a Michigan specific thing. And then lastly, item F, this is just saying that if America's One title agency is not the actual closer of the transaction, which would be the case in our situation, the mortgage is going to need to be recorded within 20 days of execution for purchase money mortgages or within 10 days of execution for non-purchase money mortgages. This is obviously only going to be relevant if you're dealing with a property that actually has a mortgage on it. If you're doing vacant land transactions for cash like I am, this is going to be completely irrelevant and shouldn't even be there, but if it is, you won't have to worry because there's obviously no mortgage or financing involved. And one thing I should note here is that all of the documents that the title examiner went through to come up with this list, if for any reason you ever want to see those documents, like you actually want to sift through the deeds and the liens listed here or any mortgages or anything like that, the title company should be able to provide that for you fairly easily. It's usually going to be a lot of pages of stuff that you're not even really going to care about. But if for some reason you ever want to dig into the actual detail and figure out what they were looking at to come up with this stuff, that's something they should be able to give you without any issues or extra charges because they already have it on hand. That's what they looked through to come up with this. Just ask them for it and they can send it to you. The idea behind this list is to take all of that stuff and just simplify it rather than making you look through all of it, which is what you would normally have to do if you're doing title search. They already looked through it for you and they're giving you just a very simple checklist of things that you need to provide in order to make everything okay. So hopefully that makes sense. Then we got a blank page here, and then the last page is Schedule B, Section 2, which is called the list of exceptions. And this is basically just one big list of things that are not covered by the title insurance policy. So if any of these things become issues, it's not the title insurance company's problem, and it's your problem. That being said, you don't need to be alarmed by this. If you read through these things, I think you'll understand pretty clearly why these are listed, because it's like impossible for the title company to truly mitigate the risk. For example, here the first one, rights or claims of parties in possession not shown by the public records. Well, if it's not in the public records, there's no way the title company can have any awareness of that issue, so they obviously can't insure against that. Any encroachment, encumbrance, violation, variation, or easements or claims of easements not shown by the public records and existing water, mineral, oil, and exploration rights. What this is referring to is things like power line easements going over your property or underneath your property, or water lines or sewers, or anything that just goes through your property and that's just how it needs to be. Those are public utilities and they have a right to go through your property in order to give your property the benefit of that utility. And you can't just move it on a whim because you don't like it there. Item 4 here again is talking about any kind of lien or claims against the property that are not shown in the public records. So again, if the title company had no awareness of it, they can't really insure against that. Item 6 here is written like your classic legalese that makes no sense to the average person. But basically what it's saying is that if there are any title issues that arise after the date of this title commitment, but before the warranty deed is recorded and the new owner becomes the official owner. So for example, if this commitment date was written on February 2, and if we actually close the deal on February 6, and then we send in the deed and all the documentation to transfer it to the new owner, and that gets recorded on, say, I don't know, March 1, and in between that time, something came up that is not reflected in this title commitment. So in other words, they had no awareness that that future event was going to happen when they wrote this commitment. Any of those issues are not going to be covered, and logically speaking, it's pretty easy to understand why. Item 7 is kind of similar, just saying any taxes or assessments that become a lien against the property after the date of closing, so just anything going forward in the future is not going to be their problem. Again, it's a pretty understandable one to have in there. Item 8 here is saying that if there are any like easements, restrictions, or rights to the property of any kind that are based on a person's race, color, religion, sex, handicap, familial status, or national origin, this policy is not going to insure against that because it basically conflicts with U.S. law. So it's just not going to be valid. And then finally, number 9 here, if the U.S. government or the state of Michigan or any other governmental entity has some kind of rights to your property. I actually had this one time when I owned a property on Lake Huron, and I found out that the U.S. Army Corps of Engineers had rights to my property up to like 50 or 100 feet from the water. I don't remember what the actual distance was, but basically, since my property was right on a federal body of water, the federal government essentially had rights to a good chunk of my property, and the title insurance company was not going to insure over that. So as you can see, a lot of this stuff is really pretty understandable, and it makes sense why they're not going to be able to insure against it. Most of this stuff you're not even going to have to think twice about because the utility lines are there, the easements are already there, the roads are already there. Nothing is really moving or changing, so there's just not a whole lot that needs to be worried about. However, I will say that with vacant land, especially if you have an immediate plan to develop that land and start building on it, you'll probably want to pay just a little bit of attention to this because, for example, if there is like a water line going right through your property or a telephone pole right in the middle of it, and that's right where you want to put your house, that's going to be a problem, and you're going to have to readjust your plans so as to not get in the way of those things that are already there. So just keep that in mind if you are planning to build on that property or subdivide it or develop it in some way. If that's what your plan is, you'll most definitely want to order a survey just to understand where all of those easements are and what you can and can't do with that property based on the pre-existing conditions there. And once you have all this done and you've collected everything that you need to here from Schedule B, Section 1, and you've delivered it to the title company and it's all done and wrapped up and ready to go, eventually what you're going to get is your title insurance policy. And I've got an example right here from one of the properties I actually bought, and this one is from First American Title, and this is kind of what it looks like. It kind of takes on a similar format to like a life insurance policy, just lists all the relevant information, what's covered, what's not covered, all the conditions of it, and that's pretty much all there is to it. And then if you were to ever have a title issue arise in the future, say if somebody was coming back and trying to sue you for a title defect and you needed to cover yourself, if you ever needed to file a claim against that title insurance policy, you would want to go to the title insurance company, which in this case would be First American Title, which should be the exact same name that is written right up here at the top. Whatever title company name you see written there, that is the actual insurer who's going to be able to help you out. This is not necessarily the same entity that helped you get this policy in place. That's the title agency, but that's not the title insurance company. It's the same thing that like a State Farm agency is to State Farm Insurance. You have the actual office that does the legwork and gets business, and then you have the insurance company that does the insurance part. So just make sure you understand, if you ever do have to go and file a claim on a title insurance policy, make sure you're going to the right person. And I think a good title insurance agency would be able to help you connect those dots. Say if you called them, and even if it wasn't their problem technically, they could at least tell you who you should be calling. So if you aren't sure who to start with, you could either start by Googling this title company name, whatever it is, and finding a number and giving them a call, or you could call the title agency office where you closed it and see if they can help you out. So if you're still with me, I want you to just stop and give yourself a pat on the back, say a little congratulations to yourself. I know that was a lot, but hopefully if you're ever trying to close the deal yourself and get title insurance, this will help you connect the dots and understand what you need to be looking for, what certain things mean in these title commitments, and how you can pull things together and get it closed officially and get your title insurance policy in place. Thanks a lot for watching. If you're looking for more information, I'll have a link beneath this video that links to a blog post on the RE Tipster blog, which goes into a lot more detail on how to put all this stuff together and make sense of it. So that's all, and I wish you all the best as you're getting your deals closed.